What's up, guys? Welcome back to another episode of Anything But ASIC, and the stablecoin wars have started. Tether lures BUSD investors away from Paxos as the stablecoin wars intensifies. Tether's liquidity drained from Curve Pool as investors flee BUSD. BUSD issuer Paxos was ordered by the New York Department of Financial Services to stop issuing the stablecoin earlier this week. At least one decentralized stablecoin project called Liquidity benefited from the collapse of BUSD. Stablecoin holders have drained BUSD liquidity from Curve Finance BUSD DV2 liquidity pool as issuer Paxos faces regulatory upheaval. Investors increased the proportion of BUSD in Curve's pool from 69% on Monday, February 13, 2022, to 81% on February 14, 2023, after U.S. regulators ordered the New York-based firm to stop minting BUSD from February 21, 2023. Curve Pool shows lower USDT and higher BUSD liquidities. At press time, USDT only made up 4% of the pool, suggesting that traders were fleeing Paxos to seek refuge in Tether, another centralized stablecoin. Outflows from Binance, whose name accounts for the first level of BUSD, totaled $2.7 billion between February 13th and February 14th, 2023. A stablecoin uses an algorithm. Other current cryptocurrencies, fiat reserves, are a combination of methods to maintain the value of $1. On February 13th, 2023, the New York State Financial Services Department ordered Paxos to stop issuing BUSD, while the SEC issued a Wells notice to the firm. A Wells notice allows the firm to defend itself against an alleged irregularity before a potential enforcement action. The notice alleged that BUSD was an unregistered security. USD allocation in 3 pool rises as investors swap to USDC for Tether. Data from Curve's 3 pool suggests that investors are also dumping USDC, a stablecoin issued by Circle International Financial, upsetting the pool's composition, which must have USDT, USDC, and DAI in an equal proportion. The dump comes as investors fear that the SEC will crack down on Circle for offering USDC as an unregistered security. Since February 13, 2023, the USDC in Curve pool has risen from 13% to 38%, while Tether's pool share dropped from 24% to 21% in 2 days. Curve is a decentralized exchange for stablecoins created by the former Russian physicist Michael Egorov. The Curve protocol trading algorithm drew attention from its slow slippage and spread between trading counterparties. Decentralized stablecoins gain ground. The mass exodus to Tether comes even as accounting firm BDO recently validated the issuer's USDT reserves recorded in a consolidated reserves report published in December 2022. In the report, BDO found that Tether cuts its holdings of commercial paper and increased the proportion of its reserves used in U.S. Treasury bills to 58% to satisfy stablecoin redemptions. After the Terra USD collapse last May, saw USDT briefly lose its value of $1. Unlike Paxos, Tether is not overseen by prudential U.S. authorities that compels it to hold capital to under the customer redemptions. Accordingly, investors risk losing their money should Tether experience a bank run. But now all BUSD holders have switched to Tether. LQTY, the token behind the decentralized lending platform, liquidity rose to an all-time high of $1.07. After the Paxos announcement, liquidity issues interest-free loans denominated in LUSD stablecoin, which each collateralizes. It uses algorithms to set loan issuance fee. 3 pool proportion of DAI has increased slightly to 40% after actions against BUSD. DeFi protocol MakerDAO issues permanent DAI stablecoin loans against ETH deposits. So overall, my assertion of this article and why I found it interesting is that the fact that stablecoins, which almost act as centralized distributed cryptocurrencies, decentralized government distributed cryptocurrencies, are having issues when there shouldn't be an issue because they're pretty much backed by all the same people. But then again, it may be made out to look like an issue just so they can cut some fat, considering that the whole entire cryptocurrency market has fallen due to the FTX fiasco, and a lot of liquidity has left the cryptocurrency market. But I still think this dodges the whole premise of Bitcoin being used as a currency, or any cryptocurrency being used as a currency for that. I don't know if anybody is. I'm sure there are. I've heard stories, but are people going to start accepting cryptocurrencies such as Bitcoin, Litecoin, Dash, Ethereum as a form of currency for services and goods? Because that's where the cryptocurrency community should be. But I don't see that happening as long as the old fiat system and the people that control it keep introducing easy ways to transfer their value of their cryptocurrency into a fiat denominated amount. That's my thought. What do you guys think? Leave in the comments, like and subscribe, and we're going to move on to the next article, which is about Dash. I've been following Dash for quite some time, and over the last 180-day period, it bottomed out at $31, which is probably the true price of Dash, but it has climbed to today, all-time high of at least 180 days. It's been higher. It's climbing back. So we're looking at $68 right now. $68 for Dash, and only half of them have been mined. And it has a lower coin cap than Bitcoin. So this has a good ability, as with those metrics, to be on par or be close to the top 5 in cryptocurrency if people were to start investing it. But gotta ask, what is holding Dash back? From what I've heard, Dash is not really good at marketing. The master nodes are pretty much unattainable, even at, for most people, even at its low price of $31, and that boat is already sold for a lot of people. And furthermore, the mining is just ridiculous. The miners from Dash have always, except for like the recent L7, have always been way more expensive than what they should be. And given current year, the only people making Dash miners are Bitmain, and those Dash miners are meant for institutional investors. Let me explain what I mean. Now, I found this thread for Twitter on Reddit, and apparently the new D9 has come out, the D9 miner, which is slightly better than the D7. Now, just a note that Bitmain was already working on the D9 when the D7 came out. They already had the D9 in working order, it looks like, and we're planning to release this possibly now. Now is the best time to release it. Does that mean that Dash is going to go up in price? They know something? Probably not, but it could be. It's all speculation right now, but the fact is that the D9 is out now, and judging by ASIC miner value, as long as nobody has this miner, it's pulling in a $24 an hour plus for 24 hours. 20 yeah, $24 per day for 24 hours. Sorry. And it's $8,500 per unit. And at 2,839 watts is definitely not for the home miner. But you would think the offset of $24 per 24 hours would be enough for the home miner, it being a positive. But considering that you have to most likely put up the power output up front and cash out that crypto, the fees alone will drive you nuts. The fees alone will take all your profits from you, and you'll end up with nothing. You'll end up never ROIing at this price. But I don't have to say too much bad about Bitmain Antminers. You already know my opinions about Bitmain Antminers and ASICs, which is pretty much why I started this channel. But I'm gonna let the comments, the people who have figured it out, as well as I have, tell it for you. And some of them also being crypto miners themselves, like DJ Mines, stating that $8,500 is ridiculous and they need to stop the cap and put the pipe down. Pelios Mining, stating that dang, that's expensive. I'm assuming they're not going to be purchasing this miner. But who really sums it up is thinking the same thing that I was thinking, which is, wow, years ago, it's full electric. While years ago I paid less than 2K for 16 D7s each, I would like to upgrade all of them, but WTF with the 8K price tag. We need more manufacturers in the space with efficiency miners, because Bitmain, you know, there is absolutely no reason to charge 8K for a D9. Other people saying it's too expensive. It should be around $4,000. The prices are monopolistic. Paul Wall stating that this is getting ridiculous. No way, nobody wants this. This is getting ridiculous now. Nobody wants this at this price, and that Bitmain is just being greedy. And it's all the sentiments that I've made before, all the statements that I made before, as the original is the miner before it hasn't even ROI'd, and the miner before it now selling at less than $2,000, but still not really meant for the home miner. The question is, should you buy ASICs? The big question is, should you buy this ASIC? Should you buy ASICs in general? I'm gonna say no. It seems like the mining realm for ASICs is over. Yes, we'll have another pump. Yes, these ASICs will become profitable, extremely profitable in 2024. That's assuming you can hold out and afford the electricity until then. But for the most part, what I'm seeing is, I don't know. The proof of stake agenda is working out exactly how I thought it would, and maybe someday Dash will advertise finally that it's going back to its roots and it has a GPU only algorithm, and we can finally get rid of these ASICs, or CPU, even better, a CPU only algorithm, or make it really crazy, a CPU but somewhat specific to just a a RISC-V architecture type algorithm, where only a RISC-V sold by the Dash authorities, decentralized authorities, can make an issue with a specific algorithm on them that can only be operated through a specific RISC-V chip. That'd be crazy. But I don't think we'll get to that. What do you guys think? Is anybody on this channel going to purchase this ASIC, knowing that they're going to come out with a J model, an E model, an I model after this that they're probably already working on, that will further cripple your ROI? That's well beyond a decade. Let me know what you guys think in the comments, and I mean anything but ASIC, and I will see you guys soon.